Hello guys, welcome. We're going to look at my dividend portfolio today, which is my trading 212 portfolio I share with fiance. She's made a decision that she wants to go income related. That's exactly what we're going to do. Yeah, here we are with the other portfolio I've got three. So we're going through the one that my fiance and I share now, and I bought 3 positions in this more recently. We put a very little amount of money into it each month. It's £38 only, which is probably about $50 or so. So 50 bucks, and I've bought 3 positions. Now, I proposed to the fiance, well, I obviously proposed to her because she's my fiance. That's not what I'm talking about. What I proposed to her was, do you want to go growth? Do you want to go value buys, long-term plays, or do you want to go income? Now we can combine all 3 in some way, in some stocks and some purchases possibly, but I've asked her what she'd like to do in terms of moving the portfolio forward. Now she wanted to go income play. She wanted the monthly or quarterly income coming in, and therefore I focused on two high dividend yielding stocks that we were already involved with, and I'll show you what they are. And actually one of them in with dollar cost averaging, which is great, and another position that we're already in. So this is nothing new by any means, but I'm just showing you with complete transparency what we were getting into. And we spent a little bit of money on, and again, another position that we're already in, which is an ETF. So again, easiest way of doing this, if I won't ramble on out here, we'll jump into the computer and we'll go straight into them. So here we are in the portfolio. So we're at £933 at the moment. We've only invested 907. We're £26 up, which is nearly 3%, which is not amazing, but made some terrible investments just before everything happened last March. Well, they weren't terrible investments, they were great investments. I just didn't expect the financial sector to plummet quite like it did. I was in a few big banks and they plummeted, but anyway. So we are up, which is good. That's the main thing. Now I will disclose fully now with you with complete transparency what we got into. So let's go into the history. So as I said to you, 2 current holdings. If I'll give you a chance to quickly guess, we're in Ultra Group, Apple, at&t, Barclays, Coca-Cola, HSBC, IBM, Johnson & Johnson, Lloyds, Microsoft, PepsiCo, Pfizer, Procter & Gamble, Royal Dutch Shell that was given to me as a share scheme type thing, the Vanguard ETF, and Walt Disney. Now I've already told you that I got into one ETF, so obviously you know which that's going to be. Obviously it's going to be Vanguard. The other 2 are very high paying dividend stocks that have been paying for 36 years and just over 50 years, 51 years I think. So out of these, which do you think they are? I'm sure you know. So let's get into it. History, yes, I'm sure you probably guessed this. So at&t, one of my favorite. If you check out one of my last videos, it was what I would have in my portfolio if I could only have 3 stocks in it. at&t was one of them. We've got a 7.23% yield, which is massive. It's still quite far down from where it has been pre-dip, and it's got some really good things coming. So I wanted to get into a bit more of at&t and expose myself into a little bit more of this company just for this year. I think it's going to do quite well. £17.39 into this. Ultra Group. It's got a yield today of 8.42%, which is astonishing. It's a dividend king. It's been paying for many years. It's a relatively safe dividend as far as I'm aware, as far as I'm concerned. They were huge in the tobacco space a long time ago, but tobacco is being used less and less now. They're going into other areas. They invested in one of the biggest beer companies in the world. They're invested in a huge cannabis company in Canada where it's legalized. They've invested in CBD and all sorts. So they're well diverse. They're evolving. They're not just stuck in the old days where, you know, everyone used to smoke but they don't anymore, so they're going to go bust. They're evolving. So I think they will, I'm confident they'll continue to pay a very healthy dividend like that for many years. And as I said, this is just an income play, not a growth play or anything like that, just an income play. So I purchased those just as the market opened at 247. Did a bit of buying today as I alluded to in my last video, but this is a different account. And then the Vanguard S&P 500, I will continually drip into that all the time, and dollar cost average, because it's one of the easiest, most passive ways of building wealth. As you probably know, if you don't know, now you know, it's one of the easiest ways to build wealth, and it's completely passive, and Vanguard do the investing for you. They follow the S&P 500 and they have returned very good figures over the years. So these are the ones I got into. this is the portfolio, which is the income portfolio. I will be steering well clear of the likes of Barclays and HSBC, Lloyds, because they're so, 40% down in Lloyds still. They've just been absolutely terrible, since the dip. Let's just keep calling it the dip. I got in where the dotted line is ages and ages ago, and then it just plummeted and it stayed there. It's just been awful. But look, let's just hold it. You never know what will happen. There's no reason for me to, or no need for me to be selling out at the moment. So we'll just stick with it and just hold it for the moment. Just keep adding to it, and we'll keep adding into good, healthily paying dividend stocks like Procter and Gamble or Disney if they bring their dividend back. But I'm on the verge of possibly selling out of that because we're 44% up and going into an income play, being that that's exactly the way the portfolio is going. Pfizer, income stock, 4.4-ish, I think, percent dividend. Pepsi, very diverse company. We're in Coca-Cola as well. Just it's got I think a 3-point-something% dividend yield. Been paying it for years and years, so they're just good quality dividend stocks. Microsoft, everybody knows. Johnson & Johnson, been paying it for 63-64 years, something like that. And the rest of them, at&t, Ultra Group. Apple has a bit of a growth play, but also does pay a dividend, and I'll be adding to Apple for a number of years. Again, I alluded to that in one of my last videos. So this is what the portfolio has done over the last year, which is nice. We were down for most, in fact, we were 25% down at one point, as you can see on screen, and we've grown it back up and got into the right plays to bring it back up, and as high as 3.3% up, 4.85% up at one point, 5.78, and then it's just come down a little bit. But we'll continue to add to this, and as I said, it's only £38 each month, but I'll continue to add to this into income plays, and I'll let you know exactly what I'm adding to it next month. So I'll see you guys out. So that's it for that one. That's the other portfolio that we're in, which is the one I share. That's the direction we're taking this one. The reasons I got into those companies, they're long-term plays, they're good, well-established companies. There's nothing too negative in the news about them. They were both slightly down when buying them, which is great, but they have a fantastic yield, and they've been paying their yield for a very long time. They're not growth plays, they're merely income plays, which is the way fiance wanted to take the portfolio. So that's exactly what we're doing. Comment below what you would have gone into for an income play. Income only. Don't want to hear about growth or value or cyclical or penny. Just income. What would you have done for an income play? Now we're talking huge yields here, so I think they're pretty good plays, considering they're very reliable with their dividend and their huge dividends. So that's really what I was looking for in this. We're already in them. There was nothing new, nothing majorly excited about this one today, but just complete transparency because it looked at as to what we're getting into, and I think that's really important for this channel. I'm not peddling things that we don't genuinely get into, or just doing stock analysis for things that we're not even getting into or reviewing. It's exactly what we're actually going into and what we're buying. So that's it for today, guys. I won't go on and on and on. If you've enjoyed this video, please subscribe to the channel because there'll be loads more content coming out, hopefully, unless I suddenly stop. But I'm not going to suddenly stop, so there'll be loads more content coming out. And like the video while you're down there. It really helps the channel and really helps me to push out the message and just get people involved in investing, which is very exciting. So that's it for today, guys, and I'll catch you guys in the next video. See you later.